Your cash is sitting in a checking account earning basically nothing, zero. Meanwhile, inflation quietly eats it alive every single month. You worked hard for that money, and right now it's just slowly losing value while you sleep. Here's the good news. There are two simple, boring, safe places that pay you real interest just for parking your cash there. A high-yield savings account and a certificate of deposit. Today you'll learn exactly which one fits your money. First, understand the enemy. A big brick-and-mortar bank often pays you almost nothing on savings, sometimes a laughable 0.01%. They make money off your money. You get crumbs. That's the default most people never escape. Online banks flip that script. With no expensive branches to pay for, they pass the savings to you as much higher rates. The very same dollars, the same safety, but earning many times more, where your bank lives genuinely matters. And safety is not a worry here. Both of these accounts are FDIC-insured, up to $250,000 per depositor, per bank, as of 2025. If the bank fails, the government has your back. You won't lose a cent. Let's meet option 1, the high-yield savings account, or HYSA. Think of it as a normal savings account that actually respects you. It pays a strong interest rate, and your money stays completely liquid. You can withdraw anytime you want. The magic word here is flexibility. Need cash tomorrow for a surprise car repair or a medical bill? It's right there. No penalty, no waiting, no permission slip. Your money is ready the moment life throws a curveball at you. But there's a catch, and it's important. A HYSA rate is variable. It floats up and down with the market and the Federal Reserve. When rates rise, you earn more. When rates fall, your yield drops too. Nothing is locked in. So a high-yield savings account is perfect for one job above all: your emergency fund. That 3 to 6 month cushion you pray you never touch, but must be able to grab instantly. Safe, liquid, and still earning. That's the sweet spot. Now meet option 2, the certificate of deposit, or CD. Here, you make a deal with the bank. You lock up your money for a fixed term, 3 months to 5 years, and they guarantee you a fixed rate. That word guaranteed is the whole point. Once you lock a CD, that rate is yours for the entire term, no matter what the market does afterward. Rates could crash to nothing, and you'd still be sitting pretty on your locked-in deal. But locking the rate means locking the money. That's the trade. With a CD, you give up access for the length of the term. Your cash is committed, sitting quietly, growing on schedule, but firmly out of your reach until it matures. Try to grab it early, and you'll usually pay an early withdrawal penalty, often a few months of interest as an example. That penalty can wipe out much of what you earned. A CD is a promise you should plan to keep. So, who is a CD actually for? Money with a deadline. A house down payment in 2 years. A wedding next spring. A tax bill you know is coming. Cash you won't need until a known future date. Let's make the choice crystal clear. A HYSA gives you flexibility plus a variable rate. A CD gives you a locked guaranteed rate plus locked up money. One trades certainty for freedom. The other trades freedom for certainty. That's the entire decision. Now here's the timing trick the smart savers use. When rates are high but expected to fall soon, a CD lets you lock that great rate in before it disappears. You freeze today's good deal and ride it down the curve. But when you genuinely might need the money, or rates are climbing, the HYSA wins easily. Flexibility beats a slightly higher locked rate when life is uncertain. Never trap cash you can't afford to lose access to. Access has real value, and you don't always have to choose just one. Many smart savers use both at once. Emergency fund and everyday savings in the HYSA for instant access. Known future expenses locked into CDs for the higher guaranteed return. Best of both. Hate the idea of locking everything away for 5 whole years? There's a brilliant fix, and it's called a CD ladder. It hands you both higher long-term rates and regular access to your cash. Let me show you how it works. Instead of dumping all your cash into one CD, you split it into 5 equal chunks. You buy a 1-year CD, a 2-year, a 3-year, a 4-year, and a 5-year, all at the same time. 5 staggered rungs. Now watch the magic. Every single year, one CD matures and frees up cash. You can spend it if you need it, or roll it into a fresh 5-year CD to keep the ladder climbing at the best long-term rates. Beautiful. That's the genius of the ladder. You get steady access to a chunk of money every year, while most of your cash keeps earning those juicy long-term rates. It quietly balances liquidity and yield without forcing you to pick just one. Now for some honesty most channels skip. Both of these accounts are for saving, not for getting rich. They're built for safety, not for serious growth. They barely keep pace with inflation. Don't confuse a safe parking spot with real investing. If your goal is long-term wealth, money you won't touch for 10 years or more, that belongs in low-cost index funds where it can truly grow. Savings accounts protect your cash. Index funds build real wealth. Pick the right tool. Here's the proof in plain numbers. Over the last century, stocks averaged about 10% a year before inflation, while safe cash crawls behind. Perfect for a short goal, but painfully slow for a long one. So how do you actually use all this? Start with one simple question about every dollar. When will I need this money? Your answer to that single question decides everything. The timeline of the cash picks the account for you automatically. Might need it any moment, like an emergency? High-yield savings, full stop. Got a fixed date a few months to 5 years out? A CD or a CD ladder locks in a better guaranteed rate. Decades away? That's index fund territory now. Next, hunt for the best APY. That stands for annual percentage yield, the real return including compounding. It's the honest apples-to-apples number for comparing accounts. A higher APY simply means more of your money working harder for you. Always compare it. But read the fine print before you commit. Watch for minimum balance requirements, monthly maintenance fees, and that early withdrawal penalty on CDs. A flashy rate means nothing if hidden fees quietly claw it all back. The details decide the winner. Let's turn this into action you can take this week. Step 1. Open a high-yield savings account at a reputable online bank. It takes about 10 minutes, and suddenly your idle cash starts actually paying you. Just do it. Step 2. Move your emergency fund and short-term savings straight into it. Watch the interest land each month. That instant upgrade, from earning nothing to earning real money on the same dollars, is one of the easiest wins in personal finance. Step 3. Got a chunk of cash with a known future date and rates look good now? Lock part of it into a CD, or build a small CD ladder. Capture that guaranteed rate before it can slip away. And please don't let any of this overwhelm you. You don't need to be a finance genius to win here. These are the safest, simplest money moves that exist. If you can open an app and tap a few buttons, you qualify. Every single day your cash sits earning nothing is money silently left on the table. You've already done the hard part by learning this. Now you just point your dollars at the right account and let them quietly start working for you. Let's lock in everything fast. A high-yield savings account means flexibility and a variable rate. It's the perfect home for your emergency fund and any cash you might need soon. Liquid, safe, and finally earning. That's option 1. A certificate of deposit means a locked, guaranteed rate in trade for tied-up money. It's ideal for cash with a known date, especially when rates are high and may fall. A ladder gives you access plus yield. Both are FDIC-insured and far better than a big bank account paying nothing. Both are for saving, not investing. Compare the APY, dodge the fees, and always let one simple question lead the way. When will I actually need this money? So tell me in the comments, are you team HYSA for freedom or team CD for the guaranteed rate? Drop your pick below. If this made cash click, hit like, subscribe for one simple money lesson at a time, and share it.